I want to update the progress in gold here. We've known since this reversal that the banks were going to attack the gold market. Uh, they have huge short positions. It's important that they don't allow gold to move above 1520. That would ignite the short squeeze. They want to get out of those shorts. They're going to try and break this below this daily cycle low. If they can do that, the selling pressure stops will get triggered, selling pressure will increase, price will probably drop back down into this consolidation zone here around 1450, and the banks will be able to exit their shorts at lower prices. If they can't manufacture this bloodbath phase, then they risk getting caught in a short squeeze, and that's what happened back here. Multiple attacks on the gold market to try and break this support zone at, well, let's just call it 1270, and when it failed, the hedge fund cartel kept defending against the attacks, and ultimately the price took off to the upside, and all those short positions that the banks held ignited a short squeeze. We don't know at this point whether or not the same thing is going to happen, but the setup is there. The banks have massively increased their short positions, trying to create this, get the stop run and create the selling panic so that they can cover their shorts lower. All right, this is the daily chart. You can see this almost 27,000 contracts in a 5-minute period. This is the largest attack in history. So they're basically going all in on their attempt to break that October 1st low and create the bloodbath phase. Now, I knew this was a possibility when we saw this reversal. We started to see the attacks on the gold market. I knew this was a possibility. Yesterday on the bounce, I alerted subscribers that they needed to make a decision whether or not they wanted to. They could have exited. Some could have exited with small profits yesterday, or just a modest loss. And they could get on the sidelines and then wait and see how this plays out. So for most people, I think they're back on the sidelines, waiting to see what happens in gold. And for most people, they view this as something bad. And I guess if you've been holding your position since the top, it would seem bad. But what comes next, corrections create opportunities, and what comes next is we're going to have another leg up in the bull market, and I think that bull market leg is going to go to 1700, maybe 1800. So in the long run, this is really just meaningless. It's just a profit-taking event. Yes, the banks are going to try and make it look worse than it is. They want to cover their shorts low, and they want to enter their long positions at the bottom if they can, and that would be our goal as well, would be to enter at the exact bottom. But you don't have to get the exact bottom to make money. Perfect example, you could have bought at the exact top of this intermediate rally and still made an insane amount of money on this leg up. The same thing is going to happen here. It doesn't matter if you catch the exact bottom or not. It will matter to your emotions, because your emotions will tell you that price is just going to go down for the foreseeable future, but that's not actually the case. And this is why I'm a contrarian investor. I understand that these corrective moves, even if they're somewhat manufactured and artificial, are still opportunities, and I use them as such. So I'm not viewing this as a permanent attack that is going to destroy the gold market. This is an attack that is potentially going to create an amazing buying opportunity and an amazing profit potential into the spring of next year. We just want to kind of sit on the sidelines and see who's going to win this battle, whether the banks will be able to break this low and create the selling panic. If so, then we'll be buying somewhere down here. If not, if the hedge fund cartel defends this again, then we'll have to decide at some point that we need to get back in, preferably before 1500 gets taken out and the next short squeeze would begin. But for now, we're still, we're out of the gold market. We're going to get out of the way of the banks, and we're still long the stock market. So, I identified the triangle pattern that it was in play and the potential breakout that was going to happen. We entered at the bottom of this daily cycle low, so we've been in the stock market ever since. So traders, are still doing well on this part of their portfolio, and we're on the sidelines in the metal part of the portfolio and waiting to see how that plays out in the days ahead. And if the banks do create that bloodbath phase, then I think we're probably likely to get our bottom sometime next week.